Okay, hi everybody. Today we are doing the extremely exciting topic of handling property insurance claims in condominium. I'm assuming you're all in condominium projects, is that right? Okay, cool. This is, you know, if I had $1 for every time a client, and I represent associations, said to me, we're not filing a claim because it's the owner's fault, I would have retired about 10 years ago. So we're going to talk about a lot of things, whether fault matters, on whether an association has to submit a claim, how claims work. But I also just really want to walk you through how property insurance claims work in the condominium context, because it's not intuitive. Okay? And while you have the PowerPoint slides, I also did just a narrative that explains the steps. And they're both going to be on the A.P.C.H.A website, so you'll be able to find them there too. But I just wanted to give you a general explanation of how they work. Okay, so the first thing, you can go ahead, Cindy. The first thing that you need to know, welcome folks. Hi, grab some food and make yourself comfortable. The first thing that you need to know is that the maintenance obligations of the association and the insurance obligations of the association are never going to line up. And when I first started practicing law in Colorado, HOA law 18 years ago, I couldn't make that seem reasonable to me. You know, you would think whatever the association's required to maintain, they insure. Whatever the owners are required to maintain, they insure. But that's not how it works. And so what you need to do is, as board members and owners, you need to read the declaration. What's that? Yeah, right. There's handouts in the back. You need to review the condominium declaration to see what the maintenance obligations are of the association and the insurance obligation. Generally speaking, from a maintenance position, the owners are responsible for maintaining their units, and the association for the common elements. And when you're looking at the declaration, make sure you look at the definition of what is a unit, okay? Because every declaration is a little bit different, and you need to understand that so you know what are common elements and what are units in terms of maintenance responsibility. But generally speaking, owners are responsible for maintaining their units, and the association's responsible for maintaining the common elements. Okay. So, next slide, please, Cindy. Oh, so property insurance, if you have an old condominium project, and there's a lot of them up here, they're beautiful, but they're older. They were built in the 60s, 70s, maybe the 80s. You are going to see in your declaration, if they're really old and they haven't been amended and restated, meaning rewritten and updated, you're going to see property insurance coverage referred to as casualty insurance or hazard insurance. So when I talk about property insurance coverage, those terms are going to be used interchangeably, okay? But in older documents, they don't call them property coverage typically. So Cindy, go ahead to the next slide. So as I said, when you're dealing with insurance and maintenance issues, you always have to refer to your condominium declaration. And there are 3 types of property insurance coverage that condominium projects can purchase in Colorado. And your declaration is going to tell you what type of coverage your condominium project is required to carry. The first one is called all-in insurance coverage, and I represent several hundred condominium projects, and I literally have about 4 or 5 that have this type of property insurance coverage requirement in their declaration. And that means the condominium association insures literally everything inside the boundaries of a unit except for personal property and window treatments. It's kind of the Cadillac of insurance coverage. It's also extremely expensive in this insurance crisis world that we're in for condominium associations to purchase, and that's why I've done tons of declaration amendments to change the type of property insurance coverage that associations are required to carry. The next one is called original construction property insurance. And the third is called bare walls property insurance coverage. Cindy, could you go to the next slide? As I said in all-in insurance, and I described it in the heading all-in property insurance coverage, that's where the association insures everything in the units, and the owners are required to insure their window treatments. I'm not sure why, but that just is what it is. And their personal property, which is not only your clothes, jewelry, but all of your furnishings and that kind of thing. Go ahead, Cindy. The next level, which is the mid-level of property insurance coverage option that your declaration may well have, and this is also the insurance that brokers will default to if you have a really poorly drafted condominium declaration and we can't tell what the insurance coverage level is. It's called original construction property coverage. And there's some kind of magic that insurance companies use where they will only insure the unit as originally constructed. And that means any betterments and improvements made to that unit anytime over the years by anybody are not covered under the association's property coverage. And instead, the owners are required to carry coverage not only on their personal property, but any betterments and improvements that have been made to the units over the years. It used to be that, even 5 years ago, guys, it used to be that when there was original construction insurance and there was an insured loss that the association's insurance covered, the insurance company would cover in today's dollars what they would have covered if the improvement hadn't been made. So let's say the unit originally had a Formica tabletop, countertop, and somebody went in and changed it to granite. It used to be that insurance companies would say, we'll throw enough money into the pot to cover a Formica countertop, and then your insurance, it's called an HO6 policy, that's the owner's policy, would kick in the rest so that you get the granite replaced. But now the majority of insurance companies say, if there's been an improvement to a component in the unit, we won't cover it at all. To the point of paint. I've had some insurance companies say, well, they painted the walls since original construction. I mean, these units are 30 years old, right? And I'm like, that's not an improvement, that's a coat of paint. But insurance companies, in lots of cases, are trying to look for ways not to cover components of the units. So where we see a lot of betterments and improvements are kitchens that are remodeled, bathrooms that are remodeled, light fixtures, those types of things are where we see a lot of betterments and improvements. Go ahead, Cindy. And this is the type of insurance coverage that typically is most economical to purchase from the association perspective, and that's called bare walls insurance coverage. And so if you think of your condominium unit as a box, you have the perimeter walls of a condominium unit, the lowermost floor and the uppermost ceiling. Bare walls insurance coverage will cover the drywall and tape, the subfloor, and it will bring the utilities into the unit to the point where they enter the boundaries of the unit. It will also cover structural components that keep your unit standing up, load-bearing walls, those types of things. And then the owner's HO6 policy comes in and does the majority of everything to restore a unit after a casualty event, after an insured event. Okay, I'm doing a lot of these. There's not a lot of difference financially between if you've got an older condominium project, between original construction and bare walls in terms of premiums, because in older projects, there's been so many betterments and improvements made over the years that it's essentially the same as a bare walls policy, okay? Go ahead, Cindy. Okay, so this is the whole point of the class. I just wanted to give you a baseline of what you need to do. So if you have a loss and somebody asks the association or the board knows they need to submit a claim or are wondering whether they have to submit a claim, here's what you need to go through. These are initial determinations, and I'm going to get into each of these bullet points in more depth. You have to first decide, is it an insured loss? Is it something that the insurance company will even cover? The next is, you have to determine what it would cost to repair or restore or replace the components the association is required to insure. And that gets back to that declaration provision that tells you what type of property insurance coverage the association is required to carry on the units. Is it all-in property insurance? Is it original construction property insurance? Or is it bare walls? And your declaration will tell you that. And then you need to determine what is the deductible on the association's property insurance coverage. And we'll talk about that in a minute. And you need to determine whether the loss to the components the association is required to insure is higher than the deductible. If it's not higher than the deductible, you never submit a claim, right? And we're going to talk about a little bit if it's close to the deductible, whether you submit or self-insure for the loss. Okay. Okay, so the first question is it an insured loss? And so I'm just looking, I'm sorry, I'm trying to get to my notes here. So typically an insured loss, if you look in insurance publications, is if the loss is sudden, unexpected, or unusual, okay? So one thing I want you to remember is somebody's negligence, if somebody caused a loss, has nothing to do with whether it's an insured loss. Under Colorado, condominium property coverage is no fault, which means we don't care what caused it or where it originated from. Here's normal examples of property insurance claims. First of all, natural disasters, floods, earthquakes. In the Front Range, we get a lot of wind and hail. I don't think you get that much wind and hail up here. It's a nemesis of ours in the Front Range. Wildfires, from natural causes like lightning or human-caused fires. Except if your policy has an exclusion for wildfires, which yours may have in the mountains, and you have to buy an endorsement to cover those types of losses. The next is fires caused by humans to buildings, barbecue grills on a deck causes a fire, cigarettes. I mean, one of my biggest nightmares was, this was several years ago, in a senior community with condominiums. They were attached townhome condominiums. A woman on oxygen was smoking in bed, and the oxygen in the cigarette ignited and killed her and burned down the entire complex. So that is an insured loss. Water losses are a biggie. It is. Water losses are the biggie in clients. How many in condos? How many of you are in stacked condos? Okay. I can tell you one thing from 18 years of doing this: water goes out and down. So you're in good shape usually if you're in the uppermost floor. But water losses are the biggest losses I deal with as a lawyer. Somebody's tub overflows, their water heater leaked, you know, their washing machine leaked, their dishwasher leaked, it goes down into the unit below and causes a major problem. I've had many times when water suppression lines that are pressurized, they'll get a prick leak in them, and when that thing goes under pressure, the water just pours out. So water is, in a condominium context, usually what I deal with, water leaks. Okay, go ahead. So is there an insured loss? And typically, if it's water related, if it's fire related, yes, unless there's an exclusion in your insurance policy saying we don't cover that. And I'm hearing up here now, a lot of my condo clients are looking at buying endorsements to cover wildfire, okay? All right, so the next thing we need to do, so we know it's an insured loss. Let's say we have an overflowing bathtub on the 3rd floor of a 4-story condo project, and water went down. And it not only went down, it trashed the inside of the unit where the bathtub overflowed. So what do we need to do next? From an association perspective, we need to find out what the deductible is on the association's property insurance coverage. And where do you find that? In the certificate of insurance. It will tell you what the deductible is. Most of the time, 10 years ago, I used to say a deductible for association property coverage, $5,000, $5,000 was the norm. If you have a $5,000 deductible now, hallelujah, because it's not going to last long. One way insurance companies are attempting to really handle their insured losses is to increase the deductible amounts. So I see pretty standard now, $25,000 deductibles. Sometimes for water-related events, there'll be a water deductible. I see those as high as $50,000 up to $100,000. Yes?
We've been told by A.P.C.H.A. that everything inside our apartment is our own insurance. Everything outside is the A.P.C.H.A. insurance.
No. You have to look at the type of, can you hear me?
Repeat the question.
Oh, so the question is, so with HOA property insurance, everything inside the unit, the owner insures, and everything outside of the unit, the HOA insures? No. It depends the type of property insurance coverage. In the declaration, the association is required to carry on the units. And if you look in the first few pages of your handout, it talks about all-in insurance coverage where the association covers everything in the unit except window treatments and personal property. Original construction insurance where the association's property insurance covers what was originally constructed in the unit, minus personal property and betterments and improvements, and then bare walls, where basically we cover the unfinished perimeter floor walls and ceilings of the unit, meaning the association, okay? All right, so we find out what the deductible is. So we have an overflowing bathtub on the 3rd floor of a unit, or of a building. Water went down and it went out in the unit, causing damage in the unit and the 2 units below it, okay? And we have a $25,000 deductible, and we have bare walls insurance coverage. And what does bare walls cover? Bare walls covers the unfinished perimeter floor walls and ceilings of the units and the common elements. So let's say, so then what happens is management, or if you're self-managed, the board gets contractors in to look at this. What you do is figure out where the damage occurred, and we always remediate water, right? Always. So we don't want mold. So we figure out the cost of remediation because typically insurance will cover that. A lot of times there's mold exclusion, so that's why we don't want mold. And we figure out, okay, with the water remediation and the replacement of the sheetrock and tape, the drywall and tape that was damaged, what does that cost? What would that cost us? And remember, we have a $25,000 deductible. Let's say that came in at $27,000. That means the property insurance coverage is going to cover $2,000 of the claim, and the deductible is going to be paid by whoever is responsible to cover it as specified in the declaration. So, one thing we know in property insurance is loss claims, meaning insurance claims that are made on your property insurance coverage, can significantly the next year increase your premium. So if you have a $27,000 loss with a $25,000 deductible, you may want to do what we call self-insure for the claim. So the board may make the decision, since our premiums could skyrocket if we submit this claim, the association will self-insure for that amount which the association's property coverage would have covered, which means the association is going to out-of-pocket $2,000. And then we figure out who covers the deductible amount. And I'm going to cover that in a little bit. Yes?
In that scenario, let's say it is $27,000, your deductible is $25,000, and you don't submit a claim. If something else happens within that year, and your deductible, let's say you did submit a claim and your deductible's already been covered, will then it be covered 100%, or is it per?
It's per occurrence.
It's per occurrence. Okay.
So the question was, let's say we don't submit, in that scenario, we decide to self-insure for the $2,000, and we don't submit a claim, and then there's another water-related or some other kind of property claim during that year. Do those things fit together? Does the insurance put those together and to figure out what the deductible is? And in property coverage, it's based upon the event, okay? So the fact that you had one covered event is not going to change something. It's not going to have any effect on what might happen 6 months later, or even a day later, okay? All right, so yes, Judy.
I'm not sure if you're going to cover this, or we should go back to coverage for just a second. We had an issue in my condominium association another year ago, where the pipes underneath the house are cast iron pipes.
Uh-huh.
And some of them were corroded. And there were also backups being created in some of the units, like things were flowing back into bathtubs, et cetera.
Uh-huh. Pleasant.
Yeah. And so without tearing the concrete floor out, the idea was to get somebody in there to do a PVC liner in the cast iron pipes within the house. However, beyond the front door, beyond the limited common element that was considered the owner's possible responsibility, was the fact that some owners had to dig down 7 feet or so to get to the intake or the readout where the two-way plumbing could have been installed, so you could get in there and ream out the pipes before this got to be an issue. But that became the owner's expense. And
Okay,
that was a confusing issue as to why that was an owner's expense.
Okay.
In the walls of the unit.
Okay, so this is a maintenance question Judy's asking, and it's responsibility to deal with old pipes.
And you don't know it until it happens.
Right. So maintenance is not covered by property insurance coverage. So, for example, I had, a pipe in not an Aspen community, a Denver community, a pipe that was a problem that the association knew about. There was a claim, the pipe broke, caused a lot of damage. The association's property insurance covered the damage to the units and the common elements, but property insurance coverage will never cover the fix to the maintenance responsibility of the association or the owners. So whoever's responsible for, at least the association, who's responsible for fixing the pipe is not an insurance question, that's a maintenance question. And Judy, what you have to look at when you're looking at maintenance responsibilities, again, is the declaration. And it will describe the maintenance responsibilities of the owners and the association. And some declarations are really poorly written and it's hard to understand. And it will also describe whether the association or owners, at what point they are responsible for pipes, wires, that type of thing. Sometimes the declaration will say when those components enter the boundaries of the unit, they become the unit owner's responsibility. Sometimes it will say from the time those pipes particularly split off from a main and serve only a unit, it will be the responsibility of that unit owner, even though it's outside the boundaries of the unit. So the bottom line is I can't answer specific questions like that because I have to look at the declaration to interpret all the provisions to determine responsibility.
Even if it says, if I just interject for a second more, even if it says that, there's really no way I'm gonna know that the pipe leading from the plumbing in my sink out to the front door is corroded or not until it falls apart. Because the unit was built 45 years ago, everything's PVC pipe now. This was cast iron pipe. But who looked at the plans to know that in the first place?
I mean, that's part of condo life, you know? I mean, you know, a lot of times with condominiums, when you see one pipe corroding, and if it's an association responsibility, the board should be considering, do we have these problems elsewhere? Do we need to get a plumber in to run, you know, cameras down lines? Do we need to figure out where these pipes are? And that's, you know, the board has to make the business judgment on what to do. If an association is aware of a problem, a maintenance issue, knows it could cause damage, does nothing about it, even though an insurance claim could be filed, the association's definitely going to have to cover the deductible, okay? And if it's not an insured claim, okay, the loss falls below the deductible amount, the association is going to be responsible because it was negligent. It had a duty to maintain the pipes. It knew the pipes were falling apart. The association could potentially have a responsibility, you know, to address those pipes. However, I want to say this is on a case-by-case basis. It depends on the facts. It depends on the governing documents. And to your point, Judy, I can't make any representations on whether an association is or is not negligent. If you have those issues as a board of an association, talk to your legal counsel and have them talk you through it.
As a result of it, because a lot of these are buildings, separate buildings, not one main building, the call went out for everybody to have these pipes inspected if they could, but if there was work that needed to be done, it was then going to be individual owners.
Yeah, and it's based on the declaration. Okay. All right, so let's go back to insurance deductibles, shall we? So if the loss is above the deductible amount, then we either, as an association, have to submit a claim on the association's property insurance coverage or self-insure for the amount the association's insurance would have covered on the claim. Okay? If, however, the loss to the components the association's required to insure is not above the deductible, then we do not, as the association, ever submit a claim in that context because there's nothing that's going to be covered. And we default to the maintenance provisions in the declaration to determine who's responsible for repairing, restoring, or replacing the damaged components. And generally speaking, Look at your declaration, everyone. But generally speaking, the components inside the unit are the owner's responsibility, and the common element components are the association's responsibility, except if the association's negligence caused the loss. Then there's an argument that the association has to cover it. But again, that's document-specific and fact-specific, and I can't give you any opinion, and I'm not giving legal advice anyhow on any particular happenings at your associations. Okay, go ahead. All right, so the question is, if we've submitted a property insurance claim, or we're self-insuring, who pays for that amount the association's insurance didn't cover? Who pays for the deductible? Okay? So you check your declaration, your condominium declaration, look in the insurance provisions for this, and see if there's a provision that addresses deductible. In old declarations, like 60s, well, I've got some 60s clients up here, 60s, 70s, and 80s, generally, sometimes 90s, the deductible will be allocated as a common expense of the association. So the association, in the example we've been using, would have to pay the $25,000 that the association's insurance didn't cover. If necessary, so I've been working a lot with my clients on amending their declaration to make it easier and more affordable to get property insurance coverage. You know, if it's a common expense under this declaration, and you're what's called a pre-Kiowa community, that means your declaration was originally recorded on or before July 1st of 1992. I recommend that you talk with your lawyer about potentially amending your declaration to not only look at the type of property insurance coverage your association is required to carry on the units, but to amend the deductible provision of your declaration that allows the association, either or both, to allocate the deductible to the at-fault person. If there's somebody caused a loss, they turn on their bathtub and never shut it off. They knew their water heater was broken and they never fixed it and it leaked through several units. Or another way my clients are doing this is the units which benefit from the association's property insurance coverage will equally cover the deductible amount. So it just depends how your declaration is written. If you're a Kiowa community, that means the declaration was originally recorded on or after July 1st of 1992. There's a provision in the Colorado Common Interest Ownership Act, that's the state statute that deals with HOAs, that allows you, if that declaration is silent, to allocate that deductible either to negligent owners whose negligence caused the loss, or to the benefited unit owners. Okay? In Kiowa, for Kiowa communities, the statute also says that you can adopt insurance guidelines that cover allocation of deductibles, how claims are handled. They just can't be inconsistent with your declaration provisions. So if your declaration says, you know, the deductible is always a common expense of the association, you couldn't in a policy say, we're going to allocate it to the owners of the units who benefit from the association's coverage. Okay? All right. Go ahead, Cindy. Okay. So let's go back to our example. What did we have, a bathtub overflowing? Was that yeah, I think we had an overflowing bathtub, we had bare walls insurance coverage, and we had a $25,000 deductible. And the loss to the components the association's required to insure is $27,000. So we are required under Colorado law to do one of two things. We are either required to submit a claim on the association's coverage for what the property insurance coverage would cover, which is $2,000 of the loss, or we're required to self-insure for the amount of the loss, meaning we out of pocket $2,000, the association, to get the repairs or restoration work done, and then we allocate the deductible however the declaration specifies. If we have an insured loss above the deductible, and the association says, we're not going to submit, and we're not going to do anything, then there's a provision under Colorado law which allows the unit owner to make the claim on the association's property coverage. That's only, in 18 years of my practice, I've only had that happen twice. And when before, however, they do that, by statute, they're required to give the association at least 15 days notice to get back to them on whether they're going to submit a claim or how to handle it. And it's at that time that you have, if you're on the boards, any board members here? Yeah. You have an opportunity to educate the homeowners, because homeowners are as lost on insurance as boards, because it's complicated, right? So it's at that time you have an opportunity to educate on either why you're not going to submit. But I've had many boards, like I said, I could retire if I had $1 for every time one of my boards said this. You can't say we're not going to submit a covered loss because somebody was negligent. So whoever left the tub, the tub faucet on that caused, the water-related loss in the building to that unit and the units below it, that fault doesn't matter in Colorado, and you can't say we're not submitting because you were an idiot and didn't shut off your bathtub. Okay. Pat Wilderado, who was here last time, that insurance broker, told me many, many, many years ago, Molly, insurance insures stupid. And I've had to remember that because it doesn't seem right. It doesn't seem equitable that the association should have to submit on their property coverage when somebody's negligence caused the loss. But just remembered, we are a no-fault state. Okay. Okay, so the bottom line for things I want you to remember about property insurance claims. It's not intuitive, how these property insurance claims work. And that's why I encourage you guys to just kind of keep this in your packets, this narrative of how this works. And to not be hard on yourself, because unless you're an insurance professional or an attorney in the HOA context, what you think should be handled, it should be handled a particular way, is likely not how it's required to be handled. So take this with you. A.P.C.H.A is going to put it on their website. The next thing is never take fault into consideration when determining whether the association is going to submit a claim on its property insurance coverage. Get that out of your mind. I know that is hard to embrace, right? Why should we submit a claim on the association's coverage when you were an idiot and caused, a several $100,000 loss? It's because you're required to under the governing documents, okay? If there is a covered claim and it's not significantly over the deductible of the insurance, really seriously consider self-insuring. Because one of the ways we can attempt in this world that we're in with the insurance markets to control our premiums is to try not to have a lot of losses submitted on our policy. So if it's just above the deductible, it's probably going to be a good bet that by self-insuring, you're not going to have your premiums rise the next year. So that's something the board needs to consider in its business judgment, okay? And if you need advice on whether or not you have to submit a claim on the association's property insurance coverage, by all means, please talk to your lawyer about it, or talk to your insurance agent or broker that you have to get some advice, okay?
I have a question.
Yes.
This might not be answerable, but is there kind of like a percentage that, or window of amount that you can expect your insurance will go up if you submit a claim? Like, is there a general, like, you submit a claim, you can expect it to go up 10% next year, or whatever?
So the question is, if we submit a claim on the property coverage, is there, you know, a premium increase we can anticipate? If it's a huge loss, so, I mean, let me give you an example. Well, if it's a huge loss, it could be canceled the next year, or you could see monumental 30% and higher increases. If it's a small loss, it may be a small premium increase, but it just depends on the market, you guys. You know, it depends on, you know, the wildfire risks up here. It depends on what insurance carriers, the standard carriers, are trying to pull out of the market. We have Travelers Insurance, which was like the insurance company we used for years and years and years in Colorado for a lot of different insurance coverages, is pulling out of a lot of smaller projects and just keeping the really massive condominium projects. So it depends on the market, but, you know, I had a situation in Denver where I had a mixed-use community. That's where you have residential units in it and commercial. And if I've told this story at a class before, please excuse me, but it's a great explanation of what can happen. So it gets really, really cold in Denver in the winter sometimes, usually in February. And the water suppression system, you know, the sprinkler system, the fire stand for the water suppression system was in a stairwell. And homeless people were going into the stairwell to be warm in the winter at night. And the property management for the commercial part of the project, I represented the residential, told the engineer, shut off the heat in the stairwell to keep them out. And so the water suppression system's sitting there. That puppy froze, burst, and sent thousands of gallons of water through all the residential units and destroyed. I mean, it was multi-million-dollar loss. In that case, their insurance got canceled the next year by that carrier. That's an extreme loss. And I mean, there's no question you submit on those types of claims. But for small claims, I mean, I've seen 10, 12% increases, and it could even be higher. It just really depends upon the insurance market. No. Yeah. 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 So the comment was, and we can all relate to it and identify completely with it, you know, it's unfair if you have a small loss or no loss for premiums to go up, for it to be canceled, and that's the facts of life we're dealing with. The Speaker of the House in the 2024 legislative session passed a bill to have the insurance division in Colorado study the problem. And that the insurance division is supposed to come back with a recommendation on January, I think, 1st of 2026 for the legislature to look at, to deal with. I mean, we're in an insurance crisis, to your point. And, you know, insurance carriers, standard carriers are pulling out of the market, premiums are skyrocketing, deductibles are going up to try to address the premium. Yeah, and she said we can't even get a new build insured here. Yeah, I mean, it's rough. So I don't have the magic bullet. And when the Speaker of the House ran the bill in the 2024 legislative session, I testified on it and said, thank you, we need to figure out how to fix this. But the study's not fast enough. You know, a 2-year study is just 2 more years of a crisis with nothing. I don't know what's going to happen. You know, my fear, we lobby HOA legislation. We have a lobbyist that we work with to try to protect associations. And we've had multiple conversations about how do you fix it? And the fact is, I have no idea. And the reason is it's a nationwide crisis. It's not just Colorado. And, you know, we saw insurance premiums for condos starting to stabilize in the last year, and then the LA fires happen. And so that just runs through the whole marketplace. So I'm sorry, I don't see much relief right now. And we'll see what, you know, the legislature in their infinite wisdom comes up with. But, you know, I'm always scared to suggest remedies because I don't want more standard carriers pulling out of the market. Because then you're stuck in excess lines with really high premiums. So it's tough, but very good points. Any other questions? Yes.
Well, this might be more of an A.P.C.H.A question.
Uh-huh.
But we had we were talking about American Family for like 20 years or so, and then they dropped out. And finding a new company is difficult. And the best price that we could get was, I mean, astronomically more than what we had paid.
Yeah.
But the values of our units don't appreciate. So it's very difficult. I mean, I know this is slightly off of what you're discussing.
Uh-huh.
But it's what's on our mind because, you know, I know we called A.P.C.H.A last year and we said, you know, we can't do anything. But, I mean, we really, really researched all the various, and we have to have insurance.
Yeah.
So I'm just wondering if there's, well, in the A.P.C.H.A side, I hope they'll make some consideration of, you know, how you reconcile values with costs becoming more exorbitant. And then secondly, you know, is there a way that, I mean, how is, you know, to get adequate insurance, and we haven't gone overboard, I mean, is there a way to find a policy, a premium policy that's not.
Okay. So the question,
I
yeah.
understand that it's
Yeah.
an issue.
So the comment first was American Family pulled out and our insurance went skyrocketing. And just so you know, American Family, AmFam, has pulled out of the condominium market. Not personal lines, but massively pulled out of the condominium insurance lines market. And then how much equity you have in your unit at A.P.C.H.A. I mean, insurance and that have nothing, they're not related in any way, and I can't speak to, you know, the equity piece for A.P.C.H.A. But the next question was, how do we handle this? How do we manage our premiums, I think is what you're asking. And first of all, a few things. One, get an insurance broker. Don't go to a single, well, you can, but I don't recommend going to a single product agent, okay? So go to a broker who can quote multiple lines of insurance, number one. Number two is look at the type of property insurance coverage your association's required to carry on the units as specified in the declaration, okay? And then have a conversation with your insurance broker, with your legal counsel over potentially amending the declaration to reduce the coverage that you're required to carry on the condominium units. In my experience, while the insurance premiums for condo projects are skyrocketing and personal lines coverage are going up, personal line coverage is not going up at the rate the condominium property coverage is, okay? In one of the best ways, but as I said earlier, if you're going from original construction to bare walls insurance coverage through an amendment to the declaration, that's probably not going to do a lot for your premium, but it is going to significantly reduce the number of claims you are going to have to submit because you're only covering the unfinished perimeter floor walls and ceilings of the unit, okay? One of the best ways I have found to attempt to manage premiums, understanding they're going to go up in all likelihood, is to increase your deductible on your property coverage. So have a conversation with your insurance broker over, okay, you have this at a $10,000 deductible. What if we went up to a $25,000 deductible or even a $50,000 deductible, okay? So those are all tools you can use to attempt to manage premiums, but there's no magic bullet. And it's just because the markets are the way they are. And every time we have a major, climate catastrophe, I just, get stressed out because I know my clients are having a hard time managing the premiums. But to be clear, in a condominium, you're required to cover the units as specified in the declaration. So it's not optional. And then also just really educate your members, your owners, over what you're dealing with, because they don't get it.
A.P.C.H.A also realizing this is an issue, and that's the biggest thing that all the HOA people have been contacting us about is this insurance thing. And they've even brought up, is there some type of self-insurance where all HOAs can kind of be part of this whole insurance group. So this is something that is on our radar. Obviously, it's not going to be a short-term process to get it through, but it is on our radar as well. So just to let you know that.
So A.P.C.H.A is looking into options and is hearing A.P.C.H.A members is what Cindy had to say. I suspect legislatively we're going to see some kind of mix that creates a state insurance program for multi-residential projects, I suspect, but who knows? We will have to see. You had a question?
So the building that we live in, we're going through a flood issue right now where we had a common line crack in the pipe, flooded the basement unit, black mold, mitigated it, we've gone through the whole repair. We have a $10,000 deductible, we're looking at about $25,000 in damage.
Okay.
So I've been speaking with our insurance rep and we've been advised to not submit because we have very low premium right now and we have total coverage.
What is total coverage?
Describe that as like full replacement construction.
So all-in insurance, maybe?
Possibly, I gotta
Okay.
look into that a little bit more. He said that's very rare that we still have that with a low premium, so
Yeah.
they're encouraging us to pay out of pocket $25 as opposed to threaten the policy we have. And
So pay out of
advised
pocket.
us to use the policy really just if something catastrophic.
Yeah, so this is a comment that they have a significant loss that's $25,000 in damage. And you have a low deductible, so you either have to submit a claim or self-insure. I think you said the insurance would cover for up to $15,000. And the insurance agent or broker, whoever you're using, is recommending self-insuring as opposed to submitting a claim because your premiums are going to skyrocket because you've got low premiums.
A worse policy.
And you'll get a worse policy from them. So first of all, you either are required to self-insure or submit for the amount the association's insurance would have covered. Check and see, there may be a mold exclusion in that policy, okay? And if there is a mold exclusion, if part of the costs are mold remediation, you would deduct that off the amount that you'd pay out on the insurance claim, right, that would be paid out. Usually I'm seeing in property coverage mold exclusions. So the board has, in this particular situation, the board can exercise its business judgment in determining what is the best thing to do for the association. Is it to pay out of pocket for the amount the insurance carrier would have covered, or does it make more sense to submit a claim? You might want to ask, when is your renewal?
August 15th.
August 15th?
So we were told that if we were to submit now, we would likely be grandfathered into, because we're already in the process of renewing, that we'd be good till August 15th, 2026, but he said at that point we would likely be dropped.
You'd be dropped.
And we'll see.
Okay, massive increases.
But it feels a little threatening, just like, well, do we use it, or?
Yeah, and that's a tough, I would ask your insurance broker, if we submit, what kind of premium, do you think we'll get? Do you have a sense, have you looked at the likelihood of the insurance being canceled, or how much do you anticipate the premium increase would be? Because in exercise of your business judgment, you need to gather as much information as you can. I'm hearing brokers, not brokers as much as insurance agents that are one kind of insurance product carrier saying that. Don't submit, you don't want your premiums to go up. So it's a tough decision. I know this does not help you.
No, you say.
You pay thousands and thousands of dollars for a product to help you, right? And then
Yep.
they're gonna drop you, or you get
Yeah.
affordable? It just.
So they're saying, and hallelujah, I agree with you. It doesn't seem fair. Yeah. Well, it's legal. They have to cover the claim. You've got a policy in effect at the time of the loss. But they can cancel at the end of your policy term for no reason. They can massively hike your premiums. You could look at, then you looked at deductibles. I recommend, if you're really all in insurance and you want to submit a claim, I recommend you look at amending your declaration and go down to bare walls coverage and then carry a higher deductible.
We looked into a higher deductible, and it's not really, it's like we're at a $10,000 deductible now. If we go to a 15, you'll only see a $93 annual increase. And if we went to a 20,000, we'd see a $180 annual increase. So it's not worth it.
Those are teeny tiny increases.
It's not-
I'd be happy to see that. But to the point, if you submit I don't see a $15,000 claim as significant, but, your broker / agent should be able to give you guidance on that. I'm not an insurance professional. Yes.
Question for everybody here, does everyone use American Family Insurance, or
We did, until they dropped
they dropped you?
Yeah, they pulled out.
We're not part of Action, we have to, we're an independent.
Okay.
So,
We went with Mountain West.
so Mountain West is the only one?
Mountain West, Cherry Creek Insurance Group, those are two brokerages who will quote multiple lines. I'm seeing the single carrier companies pull out. AmFam, you've all lost your condo coverage. The other one that was big in like the Boulder area and stuff, and I don't know about up here, was State Farm. and they pulled out. Or they were, also guys, I was dealing with a carrier in the Boulder area, and he's, you know, he was telling, you need to look at the value to make sure you're properly insuring the unit. And there was an agent who was saying, you know, this project, a condominium project, was only valued at, or only worth like $25 million when it was way higher than that. And come to find out, that's all he could write to. And so, you know, my client at the time said, but the premiums were great, so we went with him. And I said, okay, let's light incense to make sure we don't have a major catastrophic loss. Because if you have a catastrophic loss, you don't want to be carrying not enough insurance. We got through a year, and they were okay, and their premiums, of course, went up when they started insuring to the value of the buildings. It's tough, guys. I feel for you.
What was the other, is Mountain West
And CCIG, Cherry Creek Insurance Group. And the broker who was here for the last class, her name is Pat Wilderotter.
she was CC?
CCIG, yeah. And Mountains West is, I think, in Glenwood, isn't it? It's,
I have a suggestion too, that Centennial looks like they're gonna be doing. They're not the same.
Centennial Insurance?
No, our Centennial is taking on a new, because we were dropped as well, and Keith Good with Powers Insurance is looking to cover Centennial, which is.
okay. All right, make sure, guys.
Keith Good,
when
he's
you're
here in
looking-
town with Powers Insurance.
Okay.
And I can give
he-
you his info if you,
and he
after
ma-
class if you wanna.
And he may be great. I mean, all I'm telling you is I'm not recommending any broker, okay? What I'm recommending to you is you go with an insurance broker who understands and writes condo insurance. I had a mountain client where they said, Molly, look at this. They gave us these options, and it was called deluxe coverage, standard coverage, and basic coverage. And I said, if a broker ever uses deluxe coverage, run and do not walk away from them. It's not a hamburger. There is not such a thing as deluxe coverage. So it's really essential to have a broker or agent who understands condo insurance. Otherwise, I can't guarantee you're going to get, and it's their responsibility as a broker to ensure that they are insuring to the terms of your condominium declaration. Okay? That's another reason you want a knowledgeable broker. Judy?
So, do you have any suggestions for negotiating, not just with the broker, but possibly the broker negotiating with a potential agency, when the agency says, you know, gotta do this, this, and this kind of, we're saying fire mitigation. We're clear cutting this, we're removing this kind of issue.
Bring up the crowns of the trees, or the bottom of the trees. Yeah.
We're trying to replace the siding with fire-resistant siding,
Mhm.
because the buildings were built 45 years ago, and everything was wood, but we only have a certain amount of money in capital improvements, so we're doing it incrementally. To tell them that we're working on all of this, but we can't do it right away, to maybe do a more reasonable fee.
The question is, do you have any brokers who negotiate with insurance companies? The last class on insurance, what was it, the Aspen or Pitkin County Fire?
Yeah, Aspen Fire.
Aspen Fire did a phenomenal presentation on how to become a fire-wise community, to mitigate the risk of fire, wildfires, and also help you with insurance premiums in a wildfire zone. So go back and look at that if you didn't see it. Is it on the A.P.C.H.A website?
Yeah.
They were great.
And I think that I know that they just had a big conference last week, the fire department, with lots of other people, on trying to figure out how to work with insurance companies to get, you know, some give back on if you
Yeah.
do all of those mitigations, then you should be able to get
Yeah.
cheaper insurance. But that's kind of still all, I think,
Yeah.
in process. It's not.
Yeah, but here's the thing, Judy. Insurance companies hold everything right now. I mean, if they tell you you've got to take these risk mitigation steps, they're not going to insure you if you don't, okay? And so a lot of things like controlling simple things like no gas grills or propane grills on a deck or within 10 feet of a building overhang. A lot of things like that. I mean, you just are going to have to do what you can.
Well, we can do things like that, but stuff like replacing the siding on every,
Yeah.
7 or 8 buildings at a phenomenal cost.
Yep, and that's why,
Right away.
yes, so she's saying replacing siding can't be done away, that kind of stuff. I get it. That's why a broker helps, not an agent that quotes a single line of insurance. So brokers are going to quote a lot of lines for you. And just so you know, typically, like when you're doing a major construction project, you're going to bid it out to several contractors. Insurance doesn't work that way. Pick a broker and stick with that broker because brokers are quoting the same lines. And as soon as one broker goes in to get a quote for your project, it shuts out the other brokers. So you can't, it's not like you would do any other kind of project. Instead, pick a broker you trust, stick with that broker, and, because they shut each other out of quotes. And then all of a sudden, they can't quote multiple lines, and it's a mess. So just so you know, that's something that surprised me. I thought they could all quote lines, but they won't. The insurance companies won't do that.
We just went through all this and we're finding out insurance. The building that I'm in is built in 1970.
No sprinklers.
No sprinklers,
Yeah.
wood-burning fireplaces. It is stucco, it's not wood. So
Yeah.
it's in our favor. But because of the age, lack of sprinkler, and the wood-burning fireplaces, those were marked against us. The biggest thing that we were told over and over and over again is that the way in which this area is working right now with insurance is they don't care what you've done for fire mitigation yet. We're all being lumped into a wildfire urban zone.
Yep.
And until things change legislatively, we're going to be lumped into that zone regardless.
And I believe, so she's saying, the comment was, everybody's in a zone regardless of what you did for fire mitigation, that kind of stuff. There was just a bill passed this session that says that insurance companies, I believe, and I need to take a look at it, and I'll send it to Cindy to post, but if you've taken mitigation efforts, you can submit those to the insurance company, and they're required to specifically take into consideration your mitigation now. Instead of saying, you're in a fire zone, this is where you're at, okay? So this is a new law that I'm not sure the effective date. Yeah. So anyhow, I feel your pain. All I can do is give you the best advice to attempt to manage your premiums. So, any final questions?
Thank you for doing this.
Thanks for coming. Oh, yes, one
Are
more.
you seeing associations, if they raise their deductible in order to make their premiums smaller, are they putting that, raising fees to put aside an account in case that happens? Because, that's a big difference all of a sudden if you need to have 20 grand, in
Yeah,
your capital reserves or whatever.
So the question is, with insurance deductibles going up, are associations putting that money aside? And a lot of associations are doing that, and they're putting it in their reserve account, okay? And you budget for it in case you need it, that deductible amount. But hand in hand, going with that deductible, if you're going up with your deductible, I also recommend you consider amending your declaration to talk about who pays the deductible so that it doesn't have to be a common expense of the association every time. Okay?
Scenario like that, like the
Yeah.
that if it's
Someone's
someone
at fault.
negligently left the bathtub running in a scenario where their diagnosis would change that, they could be claimed.
They could allocate the deductible to the bathtub person. Yeah.
But you still have to file a claim, but then you get the money back by making that.
Yeah, you file the claim, and the insurance company covers the loss over the deductible amount, and then the person who let the bathtub run covers the deductible, pays out that. So it's complicated, but I think we had a good conversation, and hopefully kind of you understand the basics of the property insurance claims and things that you can look at to try to make it better. So, any final questions? Yes.
Just one thought about the reserve study. I live in a condo, I live in a so-called trailer park.
Okay.
But anyway, we got a reserve study, which is not cheap.
Yeah.
But it outlines your potential expenses for like 10 years or so. It's spectacular.
Yeah.
Oh, and then it recommends how much to collect every month, and it works a lot instead of getting
Yeah.
some monster assessment.
Yeah. So the comment was, we just got a reserve study, and while it's expensive, it's a perfect budgeting tool. That's what a reserve study is. So a reserve study says, these are the components the association's responsible for maintaining, repairing, and replacing. It has nothing to do with insurance, okay? And it gives you a tool to set your budget and your assessments to make sure you're funding reserves to some realistic level, okay? And it is a phenomenal tool. Yeah. Thank you for sharing that.
Should those be done on a certain frequency?
So I recommend, so you have a baseline reserve study done. I recommend every 5 years they be updated. Unless there's a major, unless we have a major climate event where, you know, our roofs and siding and everything just gets hammered with some kind of climate thing, a wind hail event, a major sleet storm up here, whatever. So, all right, any final questions? I promise next time we'll do something more exciting. All right. Okay, you're welcome.
Oh, and if you did